I am always on the lookout for an AI related stock that not a lot of people are talking about, or maybe it's overlooked. And I got a couple of them for you in this video. I'm going to talk to you about three overlooked AI stocks that are specifically on the power production end. And I still don't believe that electrical power production and from the actual manufacturing of the power, the electricity itself, all the way to the equipment to produce that, it's getting overlooked. It really is. And I think that that's a sector that a lot of people are ignoring. And I want to highlight that. Okay. So my goal with this video is to bring these to you, let you know about them. You run them through your own due diligence, but that's my goal with this channel. All right. So I'm going to reveal to you the exact three stocks here in just a minute. Stay to the end because I got some bonus stuff I want to share with you as well. Let's do this. Okay. Look, we all know that hyperscaler spending on AI data centers is massive. And the number's actually been raised to 750 billion. It's up from 670 billion. And I think the number is even higher than this. It depends on kind of which beans you're counting, but I think this number is it's inching towards a trillion just for 2026. And by the way, the hyperscaler AI capital spend by 2030, north of $5 trillion. Okay. And don't believe Wall Street or any article or talking head you see is saying that anything different right now, because I've been talking about this a long time. Okay. So look, we all need to be invested, I believe, in the NVIDIAs of the world, AMDs of the world, Micron, SK Hynix, and so forth. But I've been talking about the electrical side for a while. And one that I think is that you can still get into that is relatively cheap from the standpoint of it really hasn't taken off from how much it's gone up in the last year is Eaton. Ticker is ETN. Can explain to you why that's something that's interesting you might want to look at. Currently trading at the last market close at 398. And you can see in the last year, it's only up 12%. 6 months, it's up 24 plus percent. And right there, okay, in the last 3 months, 9%. So no major, 2, 3, 400% move up in the last year, which again is why I think it's been overlooked. Market cap 154 plus billion. This is the purest electrical infrastructure play in the group. Shares are at 422, 29% year to date, and 190%, 98% over 5 years. Look, I don't think Eaton is going to be the one that's going to go up to 300% in the next year. And that's not what I'm telling you. Okay. I think it kind of, if you look at the track record, like this is a great example, 198 over the last 5 years. So if you're looking for a good one that's really solid, just to kind of be the good anchor for you on the electrical, power production side of the AI stack, Eaton's one that you need to really look at. Electrical America's orders rose 42% organically, traveling 12-month basis. Segment revenue, 3.6 billion. Let's see. Total electrical backlog jumped 48 plus percent. Adjusted EPS came in at 281 versus 273. Again, they've got a long track record here of doing well with guidance. So look, Eaton just closed $11 billion in acquisitions in a single quarter, including almost $10 billion Boyd Thermal deal for data center liquid cooling. Okay, see it? CEO of Eaton said bluntly, in Electrical Americas, we achieved strong organic growth while advancing significant pack capacity expansion investment to meet demand. There is going to need to be more electrical power production done, period. That's why Eaton is very interesting, especially just major, this major deal, 9.5 billion for data center liquid cooling. Very, very good. This is one I want you to run through your own due diligence and check them out. But again, I full disclosure, I don't think Eaton's going to be a 200% gainer in a year. The data doesn't tell us that. Now they're ramping up again with this $9.5 billion acquisition. And you can see that they're definitely looking down the stream, to lock in more deals and so forth. This one, the next one, moving on to the second one, this one wasn't on my radar. Caterpillar. Yeah. You may think of it like what, the bulldozer company, Austin, the big, Caterpillar cat. Yes. And it's the same company. Okay. So ticker is CAT, CAT. But look at this. It's interesting. Last year, 148 plus percent up, 6 months, 57% up, 3 months, 33%, 1 month, 6%, so forth. Okay. So 5 year, 393%. So yeah, we've ran a little bit, but it's not done yet. Okay. So Caterpillar is very interesting. Market cap, 456 billion. This is the prime power story. Trades at $1,000. Oh, yeah, right there. You saw it trading about 963. Ticker is CAT. Okay. Let's do 80% year to date, 107 over past year. We talked about that. Power generation revenue hit $2.82 billion in Q1, up 41% year over year, driven by large reciprocating engines and turbines for data center applications. CapEx expenditures, guys, are not slowing down. They are not right now. And I don't think for a couple of years at least or more. Okay. And I know Wall Street is constantly trying to spook us with, oh my God, is CapEx expenditures no, they are continuing to spend, well, billions and billions of dollars. Okay. 44% growth in Q4 of 25. So back-to-back quarter growth, 41% and 44% respectively in Q1 of 26 and Q4 of 25. Broader power and energy segment posted 22% growth. I mean, look, this one's interesting. Caterpillar's one that I'm looking, I might just add this one because I like this one because this is one that's not on people's radar associated with kind of the AI stack. This one was brand new to me, which is why I'm pretty excited about it. I think it's pretty darn cool. So run it through your own due diligence. Ticker is CAT, C-A-T. Okay. The next one I've talked about quite a few times in the different electrical side. I've done about 5 or 6, maybe 10 videos talking about kind of the power production side. GE Vernova, ticker is GEV. Yep, there's trading at $1,113. Been around for a while. 6 month, we're up 63+%. On the 1 year, we're up 110%. 3 month, we're up 24%. And on the 1 month, we're up about 20%. So essentially, you know, year to date, you're looking at 110% move up. And I think that people are aware of GE Vernova. Again, ticker is GEV. I think they are aware of it. Market cap $315 billion. PE ratio 34 right there. And I apologize, I didn't show you the PE ratios on the other ones. My apologies. 49 for Caterpillar and 39 right there for Eaton. Okay, so let's go back down to where we were at with GE. I like GE. I own some GE Vernova. I do like this one, and I think it's going to continue to do really, really well. Most aggressive grid and gas turbine play in the group. Okay. Electrification segment booked $2.4 billion in equipment orders for data centers in Q1 alone, more than all of 2025. More revenue booked in Q1 of this year than all of 2025. Segment revenue grew 61% year over year to $3 billion with a book to bill near 2.5. Total orders surged at 71%, up to $18.3 billion in backlog, so forth. I mean, Jesus. CEO said, quote, "We now expect to reach at least 110 gigawatt of combined gas turbine backlog and slot reservation agreements by the end of 2026 and are raising our 26 financial guidance." I like that. Guidance now calls for 44 to 45.5 billion in revenue, 12 to 14% adjusted EBITDA margin, and 6.5 to 7.5 billion in free cash flow. 28 framework targets 56 billion in revenue and a 20% adjusted EBITDA margins. Analyst consensus sits at 1,211 with 29 buy or strong buy ratings. Okay, so it's actually at the kind of the top of what the analyst consensus are. I mean, I realize that there's definitely low and kind of higher. Middle looks like it's about 1,200. Here's what you need to remember. Look, and there's another one we talked about. We've talked about before, Bloom Energy. Bloom Energy is one that you definitely ought to look at. In fact, that's a bonus, one that's not really covered here, but let me share that one with you. Let's find Bloom Energy real quick right here. Okay. So Bloom Energy is right now trading at 270, and on the last 1 year up 1,000%. Bloom Energy is kind of the golden child on the energy. What's one that a lot of people talk about, 160+%. I mean, it's ran. I mean, it's up 1,000% in the 1 year, but it's at $86 billion market cap. I think it's got room to go. Okay. So this is one that you might want to look at. It's a bonus. It's Bloom Energy. They basically create and deploy innovative fuel systems that generate electricity on site. So what Bloom Energy is, the difference between this and maybe some of the other ones is if a data center doesn't necessarily want to hook up to the grid or be sitting next to like a nuclear facility, that's what Bloom Energy does. It's on-site fuel cell systems that generate that electricity on site. So there's different types of specs and builds for these data centers that that Bloom Energy can help with. All right. So that's what's interesting about that and why that one's interesting. So that's a bonus for you for staying towards the end of the video. And I appreciate you giving me some time on that. All right. So let me know what your thoughts was. My plan here was to give you 3 overlooked AI energy stocks because everybody's buying NVIDIA. Everybody's buying AMD. And guys, everybody's buying Micron. I own those. Okay. Whoops. Sorry about that. Sorry, I hit the microphone. I own those and I continue to own those. But I think you always need to be looking for other companies that are in the AI stack, as I talk about all the time. And Caterpillar was one that was not on my radar. Okay, Bloom I own Bloom. GE Vernova, I own that one. Eaton is one that I'm going to look at. Eaton's not going to be a high flyer. It's not going to be a 300% producer, but it's going to be, I think, a really good long-term, just a solid investment. So if you have a little bit of a lower risk threshold, okay, and you're looking at like, man, I don't want, I want less risk, Eaton's probably a good one to go with, okay, because it's just, it's just more solid and just kind of, just moves along, if you will. All right. So yeah, let me know your thoughts on all of these. I'm really curious to see. As always, thanks for giving me a few minutes. I appreciate your time. And if you haven't done so, hit that like and that subscribe. Definitely hit that subscribe because I'd love for you to stick around and hit that bell notification. Go make some money. I'll see you. Take care.